Sandeep Bhatia joining us this morning. He's the MD, Head of Equity India, Macquarie Capital. Thanks so much for joining us, Sandeep. Given by really how we are seeing the markets performing, it looks like there is anticipation of a further recovery and that the gloom and doom is fading away. Would you be on track with that opinion as well?
Well, I think there has to be a recovery after what we saw in April, May, June. Whether that means that's a sustained recovery and we see strong earnings growth come through, I'm not in the camp, at least for this year. I think the real challenges for the economy are still to be seen. We will have to see the strength of the festival season. Of course, the moratoriums are going to end, and we'll probably know only in the first quarter of next calendar year, Jan-March, where we are in terms of the wider impact on the businesses. Clearly, the winners are going to be large businesses and large caps in this environment. Small traders and MSMEs will continue to face pressures. And that is not going to go away until we see a real vaccine and a real stable medical solution to this crisis come through. There would be rallies in this market as we are seeing today, partly driven by some news flow which may not be totally fully understood. But that's what it is. To say that we are not, we have seen the end of all kind of challenges to earnings, I would not be in that camp.
I haven't heard.
I can't hear anyone.
Right. Sandeep, just wondering, sure, just wondering whether to get excited about small and mid caps or not post the regulators' reclassification of multi-cap funds. There's a lot of excitement back home, although it got a little tempered after the clarifications as well by the regulator coming in last evening. But sure enough, it does make for a smidge of higher flows, even if that be the case for the small and mid caps, which have vastly underperformed in the last 1 to 2 years?
Well, I think the economy was on a slowing trajectory even before the March event of COVID for the last couple of quarters. And therefore, a wider GDP growth environment, a strong GDP growth environment is what drives the small and medium businesses in any economy. And clearly, that's also the case in India. So would I say that this announcement is going to give us some floor to the mid caps? Maybe in the near term, yes. Would that mean there's a structural rally on that will continue for maybe more than a year? I would not be in that camp. As I clearly said in the very beginning, there are still big challenges to continue strong economic growth and earnings growth for this market. Better to be focused on large cap stocks, which have the resilience and the capital and the wherewithal to change their business models if necessary. So all said and done, that's where we are right now. And I would think that this is just a short-term rally in the mid cap and the small caps.
Sure. So where do you, Sandeep, see the big opportunities coming in? Because what we're seeing is not just the narrow nature of the market within the index, but even within the broader universe, there are very specific themes which the market is catching fancy to. You've got the entire rural theme, for instance, play up. So everything from tractors to platform companies, they are the ones which are seeing those big bang moves coming in. Would you say that the rural theme in particular, which have sort of been bereft of the infection getting or the virus getting as widespread, as a theme is here to stay, and that's where money is going to be made even further from here?
I think the rural economy is showing signs of strength. The virus has not impacted the rural economy as much, but that's still early to say. We are seeing close to 100,000 new cases come through every single day. So clearly there is widespread community spread also happening right now as we speak. I would think that the rural areas, especially directly driven by the strong agriculture performance we expect, those stocks will do well. So we would be in the camp. Escorts will do well. Bajaj Auto will do well. We could also see a rebound in some of the other four-wheeler names. So look out for how Maruti proceeds after the October-November numbers come through in the festival season, and therefore that's something which is clearly interesting to watch. Other than the rural story, one would still think that please focus on the well-capitalized private banks. Those banks have raised capital at good prices, at multiples which give them comfort. So to that extent, I think the well-capitalized private banks such as ICICI Bank, HDFC Bank are also good, and that's where we are.
Sandeep, the question is, these banks are well capitalized, but they should lend because you've raised capital, you've got a good balance sheet. But if you will not lend, भैया फिर धंधा कैसे आएगा?
Obviously, nothing happens unless you do a turnover, and for the bank, the turnover is putting out fresh lending into the economy. So that's a good question. But we have seen always that the bank lending for private sector banks is higher than the market growth. They are gaining market share in lending always. So if you're telling me that there's going to be not even 10% plus lending of the private sector banks, maybe the system lending will be weak. But on a 2-year basis, I would definitely think that the CAGR in terms of private sector's lending would be in the region of double digits and above. Not maybe this year, if you take an extreme negative bear case. But over 2 years, that's what the market should be discounting. We could definitely see lending come through at 10% plus, at least for the well-capitalized private sector banks. So if we are not going to see that, then why are we even discussing mid caps, right? Because that means that broader economy is going to see no growth, as bank lending growth will be in single digits, both for private sector and, of course, the public sector banks. Then clearly it's much more doom and gloom than anyone has been forecasting or thinking about.
Sandeep, we did see traces of money going back towards value, whether it was uptick in BHEL, BEL, even for that matter ITC. But that trade in a sense had a shelf life for 2.5 months. Do you think markets could take a serious migration back towards utilities, metals, infra? I mean, typical value names which we both know the definition of them.
I think that's a very intelligent question, and I would say the market definitely wants a longer rally, and a longer rally is not going to be driven by the same names which have rallied for the last 5 years, and therefore the value names which have missed out on any kind of rally will come through at various points in time as alternatives to the standard names. Do I think that this is a good trade in a 2-year basis? I definitely want them to be a good trade because that would mean the market will actually hit new highs with valuations of the cheaper stocks actually rallying rather than the expensive stocks getting more and more expensive. So long story short, yes, I want that to happen. Do I see a broad earnings rebound this year? I've answered this question right up front, not this year. I think the real answer to a broader rally will come between the December to March quarter, when we see hopefully some kind of a vaccine come through. People are saying, experts are saying by the end of this year or the first quarter of next year. So if we see a vaccine come through, then we can definitely hope for a broader rally and some of these value stocks coming back. Despite that, cement looks interesting. We have seen much better than expected earnings come through, and that should be the case also for the rest of this year.
Okay, what else from the sectoral picks, Sandeep? You've mentioned a few there, but if we were to take a holistic view, what would be your preferred plays sector-wise?
I think in consumers, a broader consumption theme will still run. So to that extent, Marico looks interesting. Even ITC looks interesting as a value play, but it will probably be range bound until we see the Feb budget go past it. So those are the consumption still remains an important theme. I think IT will remain interesting, especially if we see a stronger rebound come in the US post the November elections. So that's an interesting theme. The big question mark, of course, is the capex place. I don't think that capex rebound is happening even in the first half of next calendar year. It will probably be earliest in the second half or later after that, end of the next financial year. So we'll have to wait for a wider capex rebound to come through. It will still be a broad, a narrow market, and a broad basing of that market can happen if growth comes through in the second half of next year.
For an investor, Sandeep, it continues to be a tricky one to maneuver the dichotomy between, the consistently higher move on the index vis-a-vis the realistic growth scenario in the broader market. How would you really advise investors to maneuver this? Because from what you're saying, it's really best to just continue to stick to those handful of names.
I think for investors, the challenge is, what kind of timeframes they are operating in. If you're operating in a 6-month time frame, which maybe some investors would focus on, then it would definitely be a narrow range of names. To take a big bet on India, as I said, is the first quarter of next year, when we see clarity on the vaccine, when we see clarity emerge on the strength of the economy. We would also be past the fiscal deficit bad news that we are going to see in this current fiscal, where we will see all ratios go out of whack. So all of this means that right now still being a defensive narrow market kind of large cap focus, and take a call on where we are headed post Feb March for a much wider play and broad basing of the market.
Sure. Where are the contra opportunities in this market right now? And is there a merit in looking at real estate, hotels, or airlines for that matter, which are currently down and out?
Well, you have narrowed down the focus on all the sectors which are ground zero, the most impacted by the entire coronavirus situation that we are in right now. Will that massively change? Well, not for this year. I think people, even if there is a vaccine, the fact that it may take a year plus for the vaccine to be administered across the large population that India has, and then people to have confidence to come through. So these sectors, I think properties in the large metros and both residential and commercial is gone for at least 2 years. At least the values would be very weak in terms of rents per square feet or value of the property per se. If you look at the transportation, airlines, if you look at hotels, probably earliest, I would say second half of next year when we see sequential strong growths come through. That assumes that by March we see at least a vaccine come through, and that's starting to get administered in the next financial year. As I said, the entire process of administering a vaccine in a country as large as India is going to be a multi-year phenomena. So to expect that these sectors come through very quickly would be quite optimistic. Earliest I would see them coming through is in the second half of next calendar year.
Sure. Is there merit in looking at the metals universe, both ferrous as well as non-ferrous, from the near term at least, Sandeep? Because under ownership in the sector, now with the factors on ground, with HRC prices, demand upticks and price upticks as well, all seem to be acting as a tailwind.
Of course, yes. I think these are tailwinds which will continue at least for this calendar year. So I would think definitely metal sector, driven by the fact that the rebound in China is going to be is probably the best in the world right now and will continue to be so for some more time. These sectors can be played in, but definitely these are the short-term opportunities between 2 to 6 months until we see clarity on wider growth coming through. I think cement to that extent is much better. It's a more domestic-driven sector in India. than just a metal sector, which takes prices from global markets.
Okay, Sandeep, great to have you on the show. Thank you for taking the time out and speaking with us today.